Hi there. Welcome to Commodities. I'm Lindsay Biscaya. Here's some of the stories that we're tracking for you in the BNN Bloomberg newsroom. Shares of TransAlta are seeing a decline today. That's after the company announced it is buying 2 gas-fired power plants in Colorado. Despite investor sentiment, TransAlta says the $1 billion purchase from Blackstone will strengthen its foothold in the western U.S. The deal will also immediately add to free cash flow. China is reportedly buying discounted cargoes of Indonesian palm oil. According to Bloomberg, as much as 30 cargoes have been booked by Chinese buyers after Indonesia's overhaul of its export system. The report says the volumes are unusually large and more purchases are taking place this week as buyers rush to secure cheaply priced cargoes from Indonesian producers before its framework is fully implemented. Okay, let's take a look at how some key metals are trading today. We'll start with gold. You can see it is advancing as traders weigh that fragile Israel-Lebanon ceasefire and whether that will lead to progress in U.S.-Iran talks. Of course, that was one of the contentious issues, particularly for Iran when it comes to a potential peace deal with the U.S. Silver rallying alongside gold today amid a softer U.S. dollar and weaker oil prices. We'll be talking about that later in the show, but you can see gold and silver up almost a full percentage point. And then we're also watching the price of copper. It is edging higher after a rise in orders for metal in the London Metal Exchange warehouses. It's up by 0.6% at the moment. Our next guest is the CEO of a mineral exploration and development company focused on becoming a near-term producer of both gold and a critical mineral called antimony. Antimony has become essential to defense sectors worldwide, especially for the U.S. military, following China's decision to block antimony exports in late 2024, which has prompted increased attention from Western governments. So for more on this, let's bring in Brendan Bonifacio, CEO, President, and Director of NevGold. It's great to have you join us. Thanks so much.
Thanks for having me, Lindsay. Great to be here.
So I understand you found this critical mineral at your Nevada project. It was kind of unexpected at the time. Do you mind kind of sharing with us how that discovery was actually made?
Yes, we were a gold-focused company until about 12 to 18 months ago when we identified that we had large quantities of oxide antimony that came alongside the gold. So over the past 12 to 18 months, we've been rapidly advancing that antimony opportunity, and we strongly believe that we have a near-term path to antimony production out of our Limousine Butte project in Nevada over the next 12 to 18 months.
Just before we go any further, maybe if we could explain to our viewers exactly what antimony is and why it's all of a sudden become really vital to U.S. national security.
So antimony is a mineral that was not well known until around 12 to 18 months ago when China curbed exports to the United States. It's an extremely critical mineral because of its uses in military applications along and as well as commercial manufacturing. So it's highly strategic for those purposes. And what happened when China curbed exports to the United States, there was a move in antimony price from around $10,000 per ton to around $60,000 per ton. So there's a big move in the underlying price, but its key attribute is that it does have a lot of uses in military applications, being used in over 300 military devices and munitions and missiles and night vision goggles, etc.
So just how much do you expect this discovery then, with that in mind, to boost your company in the future?
Well, it's a key element to NevGold and our shareholders. We're actively working on our maiden antimony gold mineral resource estimate. That will be the first time that we quantify how much antimony we actually have. So that's coming in the upcoming couple weeks. So when we put that out, we'll be able to then define how much antimony we have, and then we'll be able to lay out a path forward for the next 12 to 24 months and how we'll be able to achieve and arrive at our antimony production scenario.
You made this discovery at the Limo Butte mine in Nevada. Can you explain to us how you're extracting it from that mine at the moment, or if you've even started?
What's interesting about Limousine Butte, most projects globally in the antimony space are sulfide in nature. We actually have oxide antimony. And having oxide antimony allows us to leach the antimony, which is the most simple and cost-effective way of producing the metal itself. So we have a key differentiating factor there. And when we look at the roadmap forward, the fact that we do have an oxide project, it also simplifies our capital intensity. So we have a very clean and simple project from a development standpoint. And having oxide is a big differentiating factor. And one key aspect to that is when you have a sulfide project, you produce an antimony concentrate, which needs smelting and refining. And currently in the United States, there's only one smelter in the state of Montana, and it's quite small. So the fact that we control our own destiny and can produce antimony metal at our project site, it gives us a leg up from a lot of the other projects and some of our competitors out there.
And you also believe that this could potentially be the only pure antimony project to be around in the next 12 to 18 months, right? Like, how would this project fit in along the gold side of your business?
Well, we are focused on the antimony first and foremost over the next 12 to 18 months. So it's quite interesting because we can phase into the operation. And one of the key aspects is this was a past-producing gold mine, and they left all the antimony behind at surface. So that's really our fast track to antimony production over the next 12 to 18 months. But we are still focused on the rest of the project, which has what looks to be large quantities of oxide antimony and oxide gold. So that is our phase 2 of the Limousine Butte project, but we are today focused on the phase 1 operation.
And the U.S. demand for antimony, I know you talked about this a little bit near the beginning of our conversation. It's around 30,000 to 40,000 tons. Global demand is roughly 130,000 to 140,000 tons per year. Do you see the U.S. having the potential to meet like a large portion of that demand in the coming years, or is it maybe still too early to tell on that front?
It's going to take some time. So we are one of the many solutions, and we simply have the fastest path to antimony production compared to other projects. But we all need to coexist to provide the U.S. with mineral security and sovereignty, which is a big mandate with the current administration, but also has extremely strong bipartisan support. So when you look at Limousine Butte as a project, we would be a portion of that 30 to 40,000 tons of demand yearly, but there needs to be other projects that come online to meet that full demand profile. And there is a big push to have all of the antimony supply coming from domestic U.S. projects.
What kind of opportunities does this space present for Canada, if any, like for both Canadian companies and Canada's natural resources?
There are many projects in Canada that are advancing, but as project development timelines go, many of them are minimum 5 to 7 years away from any meaningful production. So I think we have the ability with our Limousine Butte project to be the first mover or one of the first movers in the United States. And when we look at the Canadian landscape, it's very important that we continue to hopefully see and receive more and more government support like the U.S. is deploying with their critical minerals into projects that are domestic in the United States.
Right, and obviously we see the U.S. doing that now, but is it too late for Western countries to compete with China, do you think?
No, I think it's a big opportunity for all of the governments to look internally. Canada has some of the most profitable and prospective mineral resources in the world, and at times there are certain aspects of our country that do not make advancing a mining project easy. So I think our government can look internally, start finding the opportunities that could arrive at production in the near term and support them with financial and permitting aspects.
And just lastly, for Nev Gold in particular, what's your next key milestone with these projects?
The key milestone over the next month or so is putting out our maiden antimony gold mineral resource estimate. We will then rapidly advance into the engineering study stage and permitting with the objective of arriving at antimony production over the next 12 to 18 months.
Okay, we will leave it there. Brandon Bonifacio, CEO and President and Director of Nev Gold. Appreciate you joining us today. Thanks so much.
Thanks for having me, Lindsay.
Up next, we will hear from the CEO of Xcel Energy right after this. Stay with us. Welcome back. Let's start off by taking a look at how some key agricultural commodities are trading today. We'll start with wheat. It's down almost a full percentage point at the moment. Corn also down by more than 2%. Corn is actually on track for the longest run of decline since early January, as wet weather in the main growing region of the U.S. has improved the outlook for crops there. And a similar situation for soy as well. It's down by almost 2% at the moment, extending a drop that we've been seeing over the last couple of weeks. Xcel Energy CEO Bob Frenzel sat down with Bloomberg Washington correspondent Tyler Kendall yesterday at the Edison Electric Institute conference in Las Vegas. He said his company is investing across a wide range of energy sources, including wind and solar, to build a, quote, more modern, more resilient, more sustainable grid of the future. Take a listen.
We have a large footprint across 8 states, and data centers are driving electricity demand both this decade, and we even see more growth into next decade with our large data center customers. Big piece of our growth, you mentioned Texas and New Mexico. We serve also oil and gas customers in the Permian and Delaware Basin, some of the largest, most prolific oil and gas customers in the country, and we're building infrastructure for them too, transmission, generation, distribution. So artificial intelligence is an incredible asset for the country, and data centers are critical infrastructure, but they're not the only things that are causing electric growth across our territories.
I want to talk about, though, one of these deals, because you signed a relatively massive deal with Google for a project in Minnesota. And I was pretty struck by this stat. Electric bills for Xcel Energy customers over the past 5 years were 29% below the national average. But as more hyperscalers get on the grid, can you keep that success rate up?
We're proud of our affordability progress with our customers. We do serve 6 of the lowest 10 cost utilities in the country, so I'm really proud of that fact. Actually, data centers and data center development help keep bills affordable for our customers. If you think about the Pine Island transaction we did with Google, this is about a 750 megawatt data center where Google's going to pay for all of their infrastructure costs. They're going to pay for the full rate of their transmission usage, not a discount rate or an economic development rate as we used to call them, but the full rate. And they're going to build all the new generation. We're going to build it, own it, and operate it on behalf of them, but they're going to pay for all the new generation that's going to serve their customers. And because of where we serve, we have an interesting and unique footprint at Xcel Energy. We can do it with wind, solar, large-scale batteries, and they're going to pay for all that, protect our existing customers. And in fact, because they're paying full transmission rates, we're going to see that over a 10 to 15-year period, we're actually going to save our customers $1 to $1.5 billion over a 15-year period. That translates to 1 to 2% lower transmission costs for all of our residential customers. That's a way to help lower bills over time as opposed to raise them due to data center infrastructure.
I wanted to pull out some more specific stats because Xcel has raised its 5-year capital plan by 33% to $60 billion. At what point does that rate of spending, though, become a concern for existing ratepayers? Is that going to get passed through?
It's a great question. Look, we're building a more modern, more resilient, more sustainable grid of the future, and that comes with investment. So it is sustainable. Over the last decade, we've been able to keep our bills well below the rate of inflation for our customers. And we expect over the next decade, we can keep it at or just above inflation and make sure that our customers have a more modern, more resilient, more sustainable grid for their everyday usage, as well as energizing new industries like the oil and gas industry in the Permian Basin, like data centers across all 8 of our states.
I believe you're committed to closing coal plants by 2030, right? But given that we were talking about the need for more energy, is that timeline still realistic?
So yesterday we filed our 21st sustainability report. I'm proud to say that Xcel Energy has lowered our carbon footprint since 2005 by 58%, and we're on a trajectory to be carbon-free by the middle of the century. Sustainable, yes. We've actually planned these commitments for over a decade, and we've built the infrastructure, or in the process of building the infrastructure, to make sure that we can meet the commitment to serve our customers reliably and affordably in the absence of coal, but we'll come back with wind, solar, storage, and natural gas as backup generation to make sure that we have a resilient and reliable grid for our customers.
I wanted to ask you about natural gas because we're seeing geopolitical tensions, what's happening in the Middle East, renew this conversation about energy security. Has that changed how you're thinking about natural gas, particularly as you're trying to make this bridge away from coal power?
You know, what's interesting about our conflict with the Russian conflict with Ukraine or the Iranian conflict with the United States is we've seen very little price movement in natural gas during the duration of those events. That means that we have an enormous natural gas resource here in the United States that when we need to, we can tap into it harder and faster. So we've been able to have energy security and resiliency here in the United States despite having global geopolitical conflicts. And we've had price stability, at least on the natural gas side. And so that makes me confident that when we need the gas, we'll have access to it. And when we have access to it, it'll remain reasonably affordable for our customers.
Let's also talk about the broader alternative energy space, renewable energy. I'm wondering what you've made of the Trump administration's approach when it comes to sometimes delaying or canceling permits related to these projects. Has that changed anything in the way that you're doing business?
We've been building wind farms. We serve states that basically straddle the Great Plains, from Minnesota and the Dakotas to Colorado and Texas and New Mexico. One of the greatest wind resources, not just in the country, but in the world, to build wind farms. So we've been a leader in wind energy for 25 years. I think that's going to go unabated for us because we can, with the same amount of capital, deliver a lower cost energy product to our customers using wind. So our projects that are under construction remain under construction. Our projects that are in development are still in development. We're working through the permitting challenges, and we feel like we're going to be successful with wind now, wind into the future. And increasingly, we're doing a lot of solar, particularly in our southwestern business. You can imagine, Texas, New Mexico, southern parts of Colorado are incredible solar resources. And then lastly, I'd say, batteries have been an incredible asset for both the country and for Xcel Energy. And we're going to build the largest long-duration energy storage project as part of this Google deal you mentioned in Minnesota with Form Energy. I'm really excited about commercializing new technologies to make sure that we can remain on a sustainability journey that we've been on for half a century.
Coming up, why TransAlta is sliding after announcing the acquisition of 2 gas plants in Colorado. More on that after the break. Welcome back. We're going to take a quick look at how some key energy commodities are trading today. We'll start with the price of oil. It is falling once again, despite that ceasefire between Israel and Lebanon, because clashes are still happening in that region. And obviously, we're watching that closely. That was one of the contentious issues for Iran reaching a peace deal with the U.S. is that Israel stop its invasion into Lebanon. So we'll have to wait and see how that goes. But you can see the price of oil down almost 3% at the moment. Gasoline also falling. It's more than 3% on ceasefire optimism. And natural gas prices are rising today. They're up almost 5%. This comes after a bit of a bullish EIA storage report that was released this afternoon, showing a tighter than expected storage build for natural gas. There's also warmer weather in the forecast that's pointing to a higher power burn demand. And so that's where we're seeing the price up today. TransAlta is plunging after it announced the acquisition of 2 gas-fired power plants in Colorado from Blackstone and a $350 million share offering. TransAlta says the $1 billion purchase will immediately add to free cash flow. So for more perspective on the deal, joining me now is John Stevenson, oil and gas analyst at Granite Point Research, and he joins us in studio. It's great to have you in.
Yeah, great to be here. Thanks.
So you think this is a good deal. First of all, what do you think of the way investors seem to be reacting to this today? TransAlta's stock price has been down all day, still down more than 11%.
Well, the market's always right in my view, but I think it's a short-term reaction because this is a big number. It's $1 billion US hit in terms of the cost. But if you look what it's going to produce, it's going to be, in terms of cash flow on an ongoing basis, it's 80 million adjusted EBITDA for over 25 years and 33 million for free cash flow. So those are good numbers. I think it's accretive. It sort of implies a EV to EBITDA multiple for this transaction of about 12.5. I think all that's very positive. Look, what they're doing is getting contracted assets, and that's the name of the game. They want to move their contracted assets up to around 70%. That's what the company has indicated they'd like to do. And I think this helps get them there, and it keeps their footprint in the Western North American hemisphere. So it's all good in my view.
And TransAlta saying that when this closes in the fourth quarter, expects that free cash flow you were talking about to really start immediately. So what's not to like here? I mean, when it comes to what we're seeing with the stock price and how investors might be feeling, are they just warming up to this idea, do you think?
I think they're warming up to it. I think the big thing for this company, for TransAlta, is whether or not they get an Alberta AI data center deal. That's kind of the swing factor. Look, I think this is an undervalued stock in general, and I think most of the street thinks that as well. And I think you could see much higher prices. I think you could see high 20s, maybe even $30 and above if that deal is announced. And it's not that it's going to be such a huge deal in its own right, but just the fact that they would have a presence in Alberta, have a presence in the hottest thing going in power these days, which is these AI data center deals. And I think people sort of hope that that's going to be going to happen. It hasn't happened yet, but expectations are maybe later this year something will be announced.
How important is that to still have a presence in Alberta? Because I was going to ask you, like, this acquisition will expand TransAlta into the Western U.S. Like, how important is expanding into that region while also still having a presence here in Canada?
Well, it's an Alberta-centered company, so I think, it's very important to still be in Alberta. I think, as long as the assets that they have, which they do have, are contracted, that's huge because that reduces a lot of the risk. Like, utilities in general are very stable businesses. They're very defensive plays because those assets are contracted for long periods of time. And we're talking about something that's contracted in the case of these two assets, Mountain and Canyon Peak, for over 25 years. That's long-term cash flow. You can go to the bank with that. And you can sustain higher debt levels with a contract. And it's all, investment grade counterparty. So it's not like a flyer. In other industries, you're looking more for growth. Here you're looking for stability, some modest growth, but you're really looking for contracted cash flows that have, excellent downside protection. This is what this does. They're delivering what they should be delivering. So it's growth, it's stability, and this will help fund in many ways with this free cash flow coming off these deals for 25 years, growth in investment in things like the AI data center deal.
But does this also help TransAlta? Is this kind of a broader shift into the U.S. as well for this company, do you think?
It could be a little bit more of a broad shift, and that potentially is positive. I mean, obviously, the U.S. is a bigger market. These are very interesting assets, I think, to own. And I think it doesn't matter. It's good to have some diversification into the U.S. Very similar market, really. Same sort of players and, all those same fundamentals apply. I think it certainly doesn't hurt, and to get U.S. cash flow is probably a good thing as well.
TransAlta owns a range of energy assets, including like wind, solar, coal, hydro, gas-fired plants. How does this purchase from Blackstone kind of align with the strategy that the company already has?
Well, the company is primarily gas-fired. Centralia, which is their big coal-fired plant, they're looking at converting that to natural gas. That's part of their strategy. That will also be a needle mover if, when that occurs. This also could help fund that as well. So I think it stays pretty much within their core competencies of being primarily a natural gas producing player. Obviously, wind maybe less in terms of a return on that investment, but certainly gas, it fits in very handily. And of course, the attraction with AI data centers, if and when it does happen, is the fact that it utilizes a commodity they have lots of in Alberta.
There's also commodity price and margin volatility usually associated with gas-fired generation, right? So does this acquisition kind of address that volatility that's seen quite often?
Well, the volatility comes from the fact that natural gas, can be stored and commodity prices are inherently volatile. But I don't think you can do that financially. You can hedge out that volatility. So I don't know what their plans are for that. And I don't know that any have been announced at this point. So I would say it's probably not something to be overly concerned about. What really matters is this something that's going to be contracted volumes, which it is, and is a counterparty creditworthy, which it is investment grade. So I think all those things speak highly of it. There's very little risk.
Okay. John Stevenson, oil and gas analyst at Granite Point Research. Thanks for coming in.
Appreciate
it. And thank you for watching Commodities. You can always email your story ideas to commodities@bnnbloomberg.ca. Stay with us. The Close with Marella Fernandez is next.